All right, let's talk about building a machine. Seriously. A machine that pays you money, not because you worked more hours, but just because you own a piece of a great business. This is your ultimate guide to getting started with dividend investing. I mean, this is the dream, right? To create a stream of passive cash flow that grows with math, not with more of your own sweat and time. It's really about owning assets that just work for you around the clock. And I promise you, this is not going to be complicated. By the time we're done here, you're going to have a super clear, actionable plan. No fluff, just the exact blueprint you need to get going, like, right away. Okay, so let's dive right in. What are we even talking about when we say a company pays a dividend? What does that actually mean? It's actually incredibly simple. When a successful company, let's say Apple or Coca-Cola, makes a profit, its leadership has a choice. They can either reinvest all that money back into the business, to build new factories or do more marketing, or they can give a piece of that profit back to the people who own the company. That's you, the shareholder. And that cash payment, that's the dividend. This flowchart lays it out perfectly. The company makes money, the board says, yep, let's pay the owners, and then boom, actual cash just shows up in your broker's account. Seriously, go ahead and screenshot this slide. It's the core mechanic of this whole thing. And here's why this is so cool. It's like a 2-for-1 deal. First, you get paid that cash dividend just for owning the stock. That's your income. But at the same time, if the company keeps doing well, the value of your shares themselves can also go up. We call that appreciation. So you get paid while you wait, and you can get paid again if you ever decide to sell. Okay, so getting that cash is cool, but that's only half the story. The real, and I mean real magic, happens when you put that money right back to work. And this number shows you why it's so important. If you look back over the last several decades, reinvested dividends have made up about a third of the stock market's total return. It is a massive piece of the wealth-building puzzle that so many people just completely ignore. And this right here is the secret weapon. It's called a DRIP, or a Dividend Reinvestment Plan. It's an automatic setting. So instead of the cash hitting your account, your broker automatically uses it to buy you more shares of that same company, sometimes even tiny fractions of a share. This is literally how you turn your investment into a compounding machine, and most brokers let you do it for free. And this chart just says it all. Check this out. It's the same $10,000 in the same investment over the same 30 years. Without reinvesting, it grew to a really nice $102,000. But just by flicking on that drip switch, it grew to $182,000. That is an $80,000 difference from a single click. It's incredible. All right, let's get practical. How in the world do you find a good investment to start with? Well, the great news is you don't need a finance degree. You just need a simple little checklist to help you spot the healthy companies. So here is a quick health check. First, the payout ratio. We want to see if the company is paying out less than 60% of its profits as dividends. Why? Because that leaves them a nice safety cushion. Second, look at their history. Have they paid dividends for at least 10 years straight? That shows commitment. And third, debt. We want a company that can easily pay its bills. A simple metric called the current ratio helps here. Anything over 2.0 is a fantastic sign. And hey, if you want a shortcut, check out these elite groups. The dividend aristocrats are companies that have not just paid, but increased their dividend for over 25 years in a row. And the dividend kings, they've done it for over 50 years. These are basically pre-vetted lists of the most reliable, durable businesses on the planet. But honestly, for almost everyone starting out, the simplest and, frankly, the best way to begin is with something called a dividend ETF. Just think of it like a basket. You buy one thing, the basket, and inside you instantly own dozens or even hundreds of great dividend stocks, all at once. It's diversification made easy. And here are two of the most popular starter ETFs out there. You've got SCHD, which focuses on high-quality companies paying a really solid dividend right now. Then you have VIG, which is more about companies that are consistently growing their dividend payments year after year. Both are fantastic choices with super low fees. A lot of people actually start by owning a little bit of both. Okay, so we've covered the what and the why. Now let's put it all together. Here is a simple, totally non-scary plan that you can literally do this week. But hang on. First, a quick pop quiz. Let's say you're browsing online and you see a stock with a huge, juicy 10% dividend yield. Is that an automatic must-buy situation? No. The answer is almost always no. This is a classic beginner mistake, and it's called a yield trap. See, a crazy high yield is usually a big red flag. It often means the stock's price has fallen off a cliff because the company is in trouble, and the market is basically betting that they won't be able to afford that dividend for much longer. Be careful. Okay, here it is, your first week plan. Step 1, decide on an amount to start with. Even 50 or $100 is perfect. Step 2, open a brokerage account online. It takes minutes. Step 3, buy one single share of a dividend ETF like we talked about. 4, and this is crucial, find that setting and turn on your drip. And 5, set up a small automatic deposit for every single month. That's it. You've just launched your machine. And just remember that chart we looked at, the snowball effect. It all starts with one tiny snowflake, that very first dividend payment that you reinvest. Your job isn't to be a stock market genius. Your job is just to start. Be patient and let the unstoppable force of compounding math do all the heavy lifting for you. So I'll just leave you with this question. Forget about becoming a millionaire for a second. What's it going to feel like when you get that first email notification that says you just earned $1? Not from your boss, not from your job, but from a company you own a piece of. Well, there's only one way to find out.